Hey there, investors. The stock market is on fire. The Dow Jones, S&P 500, and Nasdaq are all up big recently. It's been a wild ride, but investors are feeling confident. There's a lot of optimism out there. This week is huge for earnings season. We've got some major players stepping up to the plate. I'm talking Tesla, Boeing, UPS, the whole 9 yards. These reports are going to give us a good look under the hood of the economy. Get ready for some fireworks. These earnings reports are going to move the market. We're talking big swings, folks. You don't want to miss this. Stay tuned, because things are about to get interesting. Tesla is set to report earnings this week, and the market is buzzing with anticipation. Investors and analysts alike are on the edge of their seats, eager to see how the electric vehicle giant has performed in the last quarter. Elon Musk and his team have been on a roll lately, with the stock up significantly this year. The company's innovative approach and relentless drive have kept it in the spotlight. The company recently held its highly anticipated robot event, showcasing its latest advancements in artificial intelligence and robotics. This event was a testament to Tesla's commitment to pushing the boundaries of technology. The event generated a lot of excitement, but it also raised some questions. While the demonstrations were impressive, many are curious about the practical applications and the timeline for these innovations. Investors will be looking for more details on Tesla's AI strategy and how it plans to monetize these new technologies. They want to understand the potential revenue streams and how these advancements will impact the company's bottom line. They'll also be scrutinizing the company's production numbers and gross margins. Production efficiency and cost management are critical factors that will influence Tesla's profitability and future growth. Tesla's earnings calls are always must-watch events, and this one is shaping up to be no different. Expect fireworks. With so much at stake, the upcoming earnings report could be a pivotal moment for the company and its investors. Stay tuned. While tech giants like Tesla grab the headlines, there's been a noticeable shift in the market lately. Investors are rotating out of high-growth, high-valuation tech stocks and into more value-oriented sectors. We're talking about utilities, real estate, and financials. These sectors are often overlooked when the economy is booming, but they offer stability and attractive dividends. With interest rates still relatively low, investors are hungry for yield, and these sectors are a good place to find it. So, don't get caught up in the hype surrounding the latest tech darlings. Keep an eye on the value plays too. Section 5. Keep an eye on the data. It's not just earnings season we need to pay attention to this week. There's a lot more happening that could impact the market significantly. We've got some crucial economic data coming out that could move the market. These reports are essential for understanding the current economic landscape. First up, we have jobless claims. This report is a weekly measure of the number of people filing for unemployment benefits for the first time. This report gives us a read on the health of the labor market, which is a key driver of economic growth. A lower number of jobless claims indicates a stronger job market. We'll also be getting the University of Michigan Consumer Sentiment Index. This index measures how optimistic or pessimistic consumers are about their financial situation and the economy. This measure tells us how confident consumers are feeling about the economy. High consumer confidence usually translates to increased consumer spending. Consumer spending is a major engine of economic growth, so this report is definitely one to watch. When consumers feel confident, they are more likely to spend money, which boosts the economy. These data points will give us a better understanding of the economy's strength and could influence the Fed's next move on interest rates. The Federal Reserve closely monitors these indicators to make decisions about monetary policy. So, as we navigate through this week, keep an eye on these reports. They will provide valuable insights into the economic conditions and help us make informed decisions. Staying informed about these data releases can give you a competitive edge in understanding market movements and economic trends. Remember, knowledge is power. The more you know about the economic data, the better prepared you'll be to navigate the financial markets. Section 6. Fed Watch. Will they cut? Speaking of the Fed, all eyes will be on them this week as investors try to anticipate their next move on interest rates. The Federal Reserve's decisions are always highly anticipated events, and this time is no different. Investors, analysts, and even everyday citizens are keenly watching for any hints or clues about what the Fed might do next. The Fed has been signaling that it's prepared to cut rates further if necessary to support the economy. Jerome Powell and his team have been quite vocal about their willingness to take action. They have emphasized their commitment to ensuring economic stability and growth, even if it means making tough decisions. Recent economic data has been mixed, with some indicators pointing to slowing growth and others showing continued strength. This mixed bag of data makes the Fed's job even more challenging. On one hand, there are signs of a slowdown that could warrant a rate cut. On the other hand, there are areas of the economy that are still performing well, which might argue against such a move. The Fed will be carefully weighing these factors as it decides whether to cut rates again. The decision-making process is complex and involves analyzing a multitude of economic indicators, forecasts, and potential risks. Financial analysts are busy dissecting every piece of information to predict the Fed's next move. A rate cut could provide a boost to the stock market, but it could also signal that the Fed is concerned about the economy's outlook. Investors are hopeful that a rate cut will lead to a market rally, but there's also a sense of caution. If the Fed cuts rates, it might be a sign that they see trouble ahead. It's a delicate balancing act. The Fed must consider the immediate benefits of a rate cut against the long-term implications for the economy. Their decision will have far-reaching consequences, affecting everything from stock prices to mortgage rates. The stakes are high, and everyone is waiting to see what the Fed will do next. Section 7. Economic impact, what it all means. So, what does it all mean for the economy? That's the million-dollar question. The earnings reports and economic data released this week will give us a clearer picture of where things are headed. Strong earnings and positive economic data would be a bullish sign, suggesting that the economy is on solid footing. On the other hand, weak earnings or disappointing economic data could raise concerns about a potential slowdown. The market hates uncertainty, so expect some volatility in the coming days as investors digest all of this information. Section 8. Bottom line, stay ahead of the game. This is a critical week for the market, folks. We've got major earnings reports, important economic data releases, and the Fed watching closely, as always. It's a lot to keep track of, but that's why you watch Mad Money. Remember to do your homework, stay informed, and don't be afraid to make bold strategic moves. The market rewards those who are prepared. Now go out there and make some serious money.